Hey everyone, it's Michael Valtos from Orderflows.com, and this is the Orderflows market analysis for Wednesday, June 14, 2017. Now, the big thing on the economic calendar was the FOMC. FOMC followed their script and raised the Fed funds rate one notch to 1.25%, and it's still low. You're still talking. Even though they raised a quarter, we're still at 1.25. That's still pretty darn low. Now, the economic data that came out earlier before the FOMC doesn't really help out the Fed. It doesn't really point to higher rates this year. We had CPI actually fell, and retail sales were unusually weak. Now, the problem I have with these retail sales is, again, I'm not an economist. I don't claim to be, and I might be totally wrong in this, but I really wonder how much online sales are actually recorded in this retail sales number. My sister works in the retail industry, and Macy's just closed a bunch of stores this year. Every year they're closing about 100 stores, and really these bricks and mortar stores are going under. And while I do think that makes retail sales look weak, really there's a lot of sales going out online. A lot of small sellers, individual sellers selling things that I don't think that's really captured in retail sales. I know people are spending. But again, when I see numbers like retail sales come out weak, and usually weak in this case, down 0.3%, I really temper it with really what's going on. I know a lot of guys that run these stores on Shopify and all these other platforms, and they're making money hand over fist. So again, I really I'm not sure how really weak retail sales really are. But anyway, again, I think their way of counting in retail sales doesn't really accurately reflect what's going on in the market. But anyway, that's just my own my own analysis. Again, I'm no Harvard educated, I say Harvard, but Princeton or Yale educated economist. I'm just a normal person. Now, stocks were mixed though, with the FOMC. Dow did hit a new record, 21,374. The other indices were a little bit lower. S&Ps, I think, were lower. Crude, again, had a big move today where there was another draw in the weekly inventories, and we're down about $1.75. And we closed somewhere near about $44.75 or $45. And again, that's not going to help the FOMC meet its inflation goal. So anyway, let's jump into it. Brief disclaimer. Before I get started, this presentation is for educational and informational purposes only. It should not be considered a solicitation to buy or sell a futures contract or make any type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Again, the tools I use in my presentations are the Orderflows Trader software, which is the volume footprint chart, and the Delta Scalper, which is a tool that I created to help analyze the delta. Again, it's not a trading indicator in the purest sense. Rather, what it does is it reads the delta and the price action and tells me, if it looks like the market is transitioning from a supply-driven market to a demand-driven market, or from a demand-driven market to a supply-driven market. Again, this is normal analysis you could just do without using the Delta Scalper. And if you just have a volume footprint chart, you can do it yourself as long as you have delta on your chart. And it's a tool to help you find more trading opportunities. So anyway, that said, we'll jump into it. First market we'll talk about today is talk about bonds. There really wasn't that many great trading opportunities in the bonds, but bonds were on a tear this morning, a big tear, and it all started just around 7:30. Very quiet morning before coming into 7:30, and then the number came out, and the market just took off here. So, coming into the 7:30 time, we had very quiet overnight session. 153.29 was the low, and by 6 in the, just before 6, we had our high of 154.10, so a very tight range. Made a new high around just after 6 o'clock. We got up to 154.12, And just sort of went sideways, and the number came out, and we had a nice big rally. Now, again, I'm not saying I'd be trading around this number. No, I wouldn't. Even though there's some bullish things in here, very tight range. I'm not looking to take a position right ahead of a number. I mean, come on. You had retail sales, you had CPI coming out, and for anyone to say come out and say, yeah, you should have bought right here, at 7:29 and 50 seconds, I think is pulling your chain. But anyway, the market, people do trade the numbers, and some people are quite successful at it. But again, I'm not an economist. I don't try to be, and I'd rather just let the market speak to me. So anyway, the number came out 7:30. We rallied. We made new highs, basically a half a point, and just kept going higher all morning until about 10 o'clock. Now, as this market started to slow down around 7:50, 7:45, 7:50 time. We started making new highs again. And, when you're making these highs, you're getting the type of highs you like to see. You like to see new highs on buying and balance on strong positive deltas. 1,200, 1,500, 1,000, 2,500. You even got a stack buying and balance. This one is it weakened out a little bit here. I just had a small delta of 187, but, okay. It's not the end of the world. It's still positive delta. Then it comes right back with a strong delta, 638. 1,000 on this red bar. Now this is where things got a little bit interesting. I thought, maybe this move was starting to weak out. You got negative delta here in these two bars, 143, 830. Then it comes back up here, 1,600. And then here you get this bar with the ratio with the divergence, which for me is almost a automatic trade. And its ratio bounds low. Next bar is lower as well, so it looks nice, but unfortunately, we just went lower by 2 more ticks, and then you got a bullish ratio here. Again, this bar point of control near the bottom. And what was interesting on this little move off this high is you're seeing some strong numbers come in here. You're seeing 4,000, 1,500, 3,000, even here in the next bar, another 2,000. So in this area here, around 12, you're seeing some supportive buying come in, 4,000, 3,000. This is already 8,000 in this bar. Another 2,500. It's 10,000 coming in, being traded here at 12. Here you've got 3,000 in this bar, another 1,500 in this bar. So I know there's buyers here at 11, at 12. Then I get a small print here, 57 lots. I get a bullish ratio. It's telling me there's price rejection down here, that in the sense that people aren't interested in selling anymore because there's probably still more buyers down here. And what happens? The market snaps back. You're seeing buying imbalances, although you expect to see buying imbalances towards the bottom here, like this, 160 against 1028, 3 against 1099, 57 against 2972. Because on a green bar, right, the place that you're going to have the smallest volume on the bid side is right here. So you'll often have an imbalance here, just as on a red bar, you'll often get it, on this spot right here, like where the 737 is, because it's 737 against 102, 67 against 826, like that, 108 against 639. These are spots where imbalances generally occur more, regularly. But anyway, they're still solid, 1,000, 2,000 here, and we're going higher. You hit this one bar here, negative delta. Okay, negative delta, fine. But, again, just because you have one bar with negative delta doesn't mean this moves over. You got a divergence. It comes right back up, makes a new high. Again, it's a failed divergence. So if you're just trading divergences by themselves, be careful, because, they fail more just about as often as they succeed. That's why I like taking them with ratios. At least it gives me a little bit better understanding that the market can sell off, because with a ratio, I believe in price rejection, or price support, price defense rather. And did it come off? I mean, it came off a few ticks, nothing special. I'm not claiming this as some great victory, but anyway, we went higher. Now it's getting up to 12 o'clock. 1 o'clock is the announcement. Again, on a Fed day, I'm not really interested in taking any signal. Like here, you got the Delta scalper at 12:30. Well, I know that in the last hour before the announcement, the market's going to quiet down. So I'll be lucky if you get 1 or 2 bars before the rate announcement, and you get 1 bar, then the rate announcement comes out, thins out a lot. Very thin volume here. We hit this high again that we had hit earlier. First time 83, second time 207. But again, it's right on the rate announcement. You're not going to be trading it, and you just go sideways for a bit, for about 30 minutes. You start selling off. To me, there's not really much to be interested in trading at this point, again, it's one rate announcements at 1 o'clock. 2 o'clock is, the unofficial bond close, in the sense of, that's when cash dealers close their books for the day. And just wait for the next day when things are settled down and people have time to assess the market. Now, there are some ratios here, like this one, you got 2 in a row here. Then you start seeing some here, 1, 2 again. But again, it's 2:25 in the afternoon. I do like this little move up, but again, I like this imbalance here. I see how the market is coming down, is reading some support. But again, I'm not looking to trade bonds at 2:25 in the afternoon. And we are a little bit higher from that low, but we're lower from the close right now in the evening session. Now, the 5 years were kind of similar, but 5 years gave you a little bit better trading opportunities in the sense of delta scalper and divergence in ratios. So early, say early, but 8:43, you had this first delta scalper give you a signal. It didn't work out. It came right back. Honestly, when it got down to this point, I remember looking at this level at 19.5, thinking, if we get below there, some selling could come in and push this market lower. And I was looking for a move lower down to about 17. It only got down to, 18.25. But there was some decent volume down here. You see 1,800, 5,000, 1,700 in this bar, another 2,900 in this bar. So that's about close to 4,000 there. And obviously 1,400. And then the market came right back, delta scalper given a buy. So this delta scalper here, this signal failed. You would have taken a loss. And then the next one came back and gave you a nice trade. You rallied up, making new highs. Again, you're making highs on solid delta. Here, 7,000, 8,000, 13,000. These are strong numbers. And they're strong in the sense that they're closing almost on your max delta number, 6,854. That's your max delta. 7,445, max delta 7,446. 8,696, max delta is 8,945. 13,400 is 14,000. Now then you get up here, and it's all changed. You had positive delta of 4,983. And what happens? It changes. A lot of selling comes in up here. This is 10 in the morning. And all of a sudden you end up with a negative delta, 8,519. Your min delta is 8,638. So, the bar had a big shift, from, that's a move of plus 5,000 to minus 8,000. And you got a ratio and a divergence, which I talk about till I'm blue in the face. And you got a nice sell-off. So, this is one of those days where, the first trade, is a losing trade. Second trade's a decent winner. Third trade's a decent winner. So again, if you give up after the first trade, you let it get to you, say, this day sucks, I'm not going to trade, I should have had a winner there. It turned on me, became a loser. And then you miss the next trade. And then you kick yourself because, what's worse than having a loser is not taking a trade that's a winner. It affects you just as much as a loser. And then, 1 o'clock comes out. And very thin volume. You can just see it here. You get some signals. Delta scalper again. I'm not looking to trade at that time. It does slow down a bit, about 1:30ish, and then we just go sideways for the most part. We do come down into this sort of this swing low, no ratio down there, and right now in the evening session we're just a little bit lower. Now we'll look at S&Ps really quick. 10 range. Find you here. S&Ps, I thought the day would be a little bit more quiet early on, honestly. It wasn't. It sold off in the morning. Where was I here? So anyway, coming back to around the 7-ish morning time. We had hit our high up here at 8:30, and prior, when we hit that high, 43.25 was the high, 35 was the low. So you're talking about an 8-point range. And then opening prices 38 and a quarter, and then around 8:30 we started rotating around it for the next half hour. I really thought we'd spend more time just sort of hanging around it, but some selling came in. You could just see it in the deltas, mostly negative deltas. There wasn't any reason to be buying it down here. People, I talk a lot about buying on lows or selling on highs, but again, that's not what I do per se. Rather, I let the market tell me to if I should be buying near the lows or selling near the highs. And right now, it's not telling me anything. It's not telling me to get long. And we just sort of hover around here now, going sideways until 1 o'clock. From this is from what time on this low? 10 o'clock until 1 o'clock. So it's 2 hours. Then the number comes out again. Give it some time. You got an announcement coming out. Then I believe you had a press conference later, and let the market settle down. If you bought this low, the swing low here with the Delta scalper, it went up, yeah, but then selling came in. You got a stacked imbalance here, and the market came in and took you out. But then later you had a nice buying opportunity down here. What do you got? You got a ratio 0.68. You got a divergence, and the market did pop up a little bit. Then it gets up here to a bearish ratio, and then just starts going sideways on you, and then comes down here and takes you out again. Then so imagine think your way through it here. Now this again, you have this swing high up here. Again, I'm not looking to take any trade right around the 1 o'clock to 1:15. Even 1:30 is pushing it here, 1:24, but still I do think around this time the market has kind of quieted down. It's taken a few minutes, taken more than 30 seconds to form a bar here. This bar took 10 minutes, so to me the market's quieted down a bit. Things do pick up again later, but 149, to me this is a go trade. This one is borderline with, if I would have taken, I probably would have bit. This one I definitely would have bit. And so the second time, 2 trades didn't work out for me there. Then what do you get here? You got your new low, 24.25 and 3/4. Divergence, no ratio. Next bar, you got the ratio, and you got the Delta scalper giving you a buy signal. This is 2:22 in the morning, in the afternoon, and now it's go time. So put out the losing trades, get them out of your mind. You're getting long here, 24.30, and what do? It rallies all the way up to 35, even goes higher. I like on 10 range, I like to shoot for about 5 ticks. And you get it. So you have your 2 losing trades you could beat yourself up over, but again, don't sit there and say, I shouldn't be trading today and just give up. If you're going to do that, might as well just cut down your size to the minimum of 1 lot and keep trading and try and get yourself back on side again, at least mentally. End the day with a winning trade, whether it's a winning trade for 1 tick on a 1 lot, or 5 ticks or 5 points on on 5 lots. At least try to end the day feeling good about yourself. People that, different ways of handling losing days. I'm not saying, this could have been a losing day, but still, I know people that really beat themselves up over having a losing day. Like, they take it personally. Like, they, for whatever reason, they don't know what they're doing. There was a guy on the board of trade, after he had a losing day, he'd go out and buy himself something nice. Spend a couple grand on something, just because he knows that even though he has a losing day, he still has money, that he could still afford things in life. And trading is, the mental game of trading is very important. And right now, we are a little bit lower, here in the overnight session. Again, there's 3 in a row, but then you get hit this divergence. But again, it's the evening session. Right off the reopen, you got 3 in a row. I'm not a big fan of trading signals right based on the opening. But anyway, right now trading 24.30. We'll see where it ends up in the morning time. Now, what else I want to talk about? Crude oil, I think. Crude oil, again, crude oil was down again today. Where we trade right now, 44.64. But there was still, you had the inventory numbers come out at 9:30. But even before that, I believe there was something interesting worth talking about. this high, I remember talking about this high in the room. You had, you're coming up here, you got 663 positive delta, you got a stack buying imbalance. That's nice. Tells me, this market can potentially go higher. And then what happens? You start coming up here, 96 positive delta, 105 and a red bar. And then boom, minus 524 delta. This the way it changes in this bar is very telling that, hey, you know what? We've changed. We've gone from a demand-driven market to a supply-driven market. Demand, buying, buying, buying. Positive delta, then weak positive delta. On your high, weak positive delta. It's kind of, I'll say weak positive delta, but it's only 100. It was positive 400 at one point, ended up at just 100. So it gave it all back. And then big selling came in here, 524. If you're not convinced yet, say, I'm not convinced. Then you get this bar, very neutral delta, 11. It's a difference of one trade, two trades maybe. And then bam, another big selling bar with a lot of selling coming, minus delta, 706. At this point, you should say, you know what? Sellers have taken over already. And over the next few bars, you go lower, then you just sort of hang around sideways until the inventory numbers come out. Volume thins out. You can just see it's all over the place here. You do pound into some new lows, and later, it's still this is still 931 here. So you had this big move from, again, I see people talking about trading this, trading crude around these inventory numbers like it's easy to do. They trade it in sim or whatever, I guess, but they don't trade it with real money. But think about it for a second here. 929, inventory comes out at 930. Maybe my clock's a little off, but you're trading at your high 46.49. Okay, and then what happens? Inventory number comes out 46.49, right? That's your high. And 9:30 in 15 seconds, you're trading 45.72. So you had a 75-cent move from your high to new lows. Actually, you went lower, down to 45.66. So, 80-cent move. So, these people say, oh yeah, you just trade it, you take your position up here right at the high, get short. Yeah, then, 15 seconds later, you're 75 cents in the money. That's all bullshit. You try and do that with real money, and when it goes 75 cents against you, tell me how great a trader you are. But anyway, 940, has the market got its footing back? It's still moving pretty quick, and there's still a lot of selling going on. It's put in some, each bar's got decent volume. It's about, one bar is about 30 seconds, and it's trading about 2,000 lots per bar. A lot of selling coming in here. Still 941, 940 you got 4 bars. 941 you got about 5 or 6 bars. So the market still hasn't slowed down yet. Finally it starts to slow down around 10 o'clock, and this time we're trading much lower, trading 44, whoops, what's going on here? 44.77, and you get down towards your low. You have a delta scalper giving you this buy here just before 10 o'clock. It's a green bar. Yeah, do I kind of like it? Yeah, I do, but it doesn't work out. It fails. Then you hit this low here, ratio, a divergence, no ratio. It's still a black number. Market pops up a little bit, but then selling comes right back in. Again, there's no reason to be buying off this low yet. You got this, to me, this is what a stop induced selling imbalance looks like here with all these zeros. Then you get the pullback into those areas, and again, is there any reason to be buying down here yet? No, not really. Even here, is there a reason other than the delta scalper? Well, you are starting to string together some positive deltas, which is nice. If you are going to rally off the low, you're going to need to string together some positive deltas. Selling does come in once in a while on some of these bars. You can see minus 360, minus 430. Doesn't necessarily mean it's over. Again, down here, again, you get the delta scalper coming back in, almost at the same level, but a little bit higher, I believe. But at this point, the market is just going sideways on you. Again, are you going to take it? 12 o'clock, you could take it, but when you start getting around 1 o'clock, be careful if you're still in that position. In this case, the market just sort of hung around and did nothing for the next 15 minutes, and then it started picking up again. But for the most part, after that, this area 44.70, 44.65. That's about where we spent, where we closed. Here we closed around 44.70, I think. Right now we're just, went lower in the evening session, came back up. We're just right around 44.65. So I mean, there was, crude oil was I'll say a difficult market, but it was a market where there's a lot of stuff on the table that's going to affect your trading decisions. I said you got inventory numbers, you got FOMC, so there's just a bunch. You had a full plate to deal with. Now soybeans were interesting. Reopen 8:30 here. You came up to this high. This is a ratio, but it's not a divergence. It's it's a signal telling me there's probably some trap traders up in here. Do we come off a little bit? Yeah, we come off about a penny. Rally back up. Got a new high with a divergence. No ratio, but you get the ratio in the next bar plus a stack selling imbalance, which is good. I always talk about, if you can't get the ratio in the bar with the divergence, look to the next bar for the ratio, and you get it here. Plus you get a stack selling imbalance telling you, hey, get short. And the market sells off about 3 cents and just sort of goes sideways. A little bit later you get another delta scalper sell here, and we sell off from the 935.5 area down into 931 area before closing and going sideways in the evening session. Now it's interesting, in the evening session you have this low here at 930 with some very solid volume, 819. Again, I'll be very interested to see if we test that again tonight. I'm sure the volume is still there. Now euro currency, I think you got, okay, the data on the CME website hasn't come out about the open interest for the day. If it's, I do believe it'll switch. This is what time is it now? It's 8:15 tonight, and this is the CME website, and they have, what I'm watching is, it's on Monday the 19th is the contract expiration for the June, and the volume is still in the, well, this is for Tuesday, right here, Tuesday. They don't have the Wednesday final yet, but I just know by looking at my charts late in the day that the volume is thinning out in the June already. But I think by later when they update this, I think you'll see the change. Big negative here for the June in the open interest, and a big positive, and you'll see the open interest is taken over in the SEP contract. That's how I know to get out of the, or stop, I'll say get out, but rather stop trading the June contract. And so let me just pull up the June. I could just see by looking at the volume how thin it is. These numbers, you don't get really many bars with 100 contracts in it when normally you would. But anyway, there was still some interesting things here. Again, 1 o'clock, market just went bonkers. We go back to around 7 o'clock. I like starting around 7:20 is the old floor open, but again, just bear in mind that you had 7:30, you had a number come out. But anyway, it sort of slowed down. I thought it slowed down about 5 minutes after this number came out. And you get your high here, no ratio, no divergence. Next bar, you got a ratio. You do have the delta scalper come out. Next bar was lower, but you hit this one bar here with the point of control right on the bottom here and a bullish ratio. So to me, this setup in this bar is very bullish as well. And then the market rallied on, and didn't expect it to come on rally all the way up to new highs. But as far as getting out of this short position, when I see a bar like this, it's telling me, hey, there's some support down here. If you're in a position, get out, or maybe take something, some ticks out of this trade. And then you see, so you're hanging around here, right? You got negative delta, even this bar negative delta, small negative delta. Then this bar positive. You're going into the highs on some decent positive deltas, 253, 300, stack buying imbalance. Do you make new highs? Yeah, you do. And then you just sort of go sideways, come around, circle back up. You get some selling come in, and then positive deltas again. You know, a bunch of scattered buying imbalances in here on the way up. Yeah, 808, you had this ratio with the divergence. Now, yeah, it's a ratio bounds low, but just looking at these numbers, to me, it's kind of small. You know, that's why I say, you know, it's, you know, be careful. You know, I like to look at numbers. I'm always hesitant when they're sort of smallish numbers, 8, 5, 3, 6, 1. You know, for a ratio bounds low, I like to see, you know, better numbers than that. Up here you get a divergence, no ratio in the next bar, but again, it's still relatively small volume. You know, the market does sell off a little bit, rallies back up within 2 ticks of that high, and then sells off. Here you get the delta scalper giving a sell, and it just sort of goes sideways on you, makes a new high, failed divergence there. You know, nothing really up in there, and then, you know, and then it just started slowing down between, you know, 9:30 to 10 o'clock, which is around, you know, 10:30. This is around the European close time. Delta scalper gave a sell here, and it just came right back on you. 12 o'clock. Now again, you know, it's 12 o'clock, and you've got, you know, you got an FOMC coming out in an hour. Do you want to be taking any trades? You know, 12 o'clock, you probably could. Unfortunately, if you took this, it just came right back on you. Now, again, you know, the telling thing that there was that this move wasn't going to go any higher is this bar here. You got some decent volume up here. You got this buying imbalance. You've got 125, 142. So I know there's some volume towards the top of this bar. The sellers came in up here to support this. I'll say support this money. When I say the word support, you know, you think of something, you know, buying, but, you know, defend is probably a better word. And then you can see it just selling, you know, the buying just dried up. Okay, you know, went bid here, 142 even. And then, you know, once these people were buying it, trying to get it higher, realized they couldn't go higher. It's like, you know, they just put their hands back in their pocket, and the market just fell over. You can see, you know, what little volume is traded on the bid here. Hardly any buying in here on the way down, and then the market just, you know, comes off another 10 ticks. Now you come up here at 12:57. Again, I'm not going to take any trades right ahead of that rate announcement. You can see it's all 13 o'clock, and, you know, 10 seconds, 9 seconds, 11 seconds, 14 seconds. You know, it's pointless to talk about, you know, what's going on in the order flow, because it's just so thin. You know, market settles down. You know, when does the market settle down? It's hard to say. You know, you do have some big volume support in here. You got 1,000 traded on the bid here at 47. You know, so, you know, whenever I see big volume like that, you know, in most markets I'd be interested. But sometimes, though, in the currencies I'm a bit hesitant, because it could be against the cash position. You don't know. But still, you got a nice stack selling imbalance, and you got a ratio in the next bar. I like stacked selling imbalances with bearish ratios in the next bar, or the opposite would be a stacked buying imbalance with a bullish ratio. I find this to be a higher percentage trade than just a stacked imbalance on itself. And you'll notice how, where did this bar come up to? It came right up to the point of control here, where you had the 1,000. So, you know, got through there. You know, if you've ever traded the market and there's a real legitimate bid there that you're selling into, whether it's an iceberg or a solid bid where it's showing the whole thing, when you get through it, you often snap back up to that level, and you might still see some selling come back in there. Now, again, I'm not saying, you know, it's only 22, it's not much, but, you know, it's still a level that, you know, people were watching. You know, everyone was trying to get it past this level, and they did, and it bounced back up right up to that level. Selling came back in again, and it sold off quite nicely, very quick. This is most of the time it's 134 and 22 seconds, and you know, 10 seconds later at 32 seconds, you know, we're trading down from 47 down to you know, basically 37, and you know, we still just keep dropping. Yeah, you do get the delta scalper giving you a buy here, but again, you know, this market is moving very, very fast. Now, not necessarily a lot of volume. Delta scalper, but it's on a red candle here, so again, I'm not really interested in taking it. Market's still moving very fast. One bar is taking, in some cases less than a second to form. So there's still volatility in this market. There's nobody putting a gun to your head to trade and saying you got to trade during fast market conditions. If the market's just going nutso on you, just wait for it to settle down. Wait for the market to tell you something. This was interesting. You had the stack buying imbalance on the red candle. Normally you'd get stack buying imbalances on green candles, but in this case it's a red candle. So it's not big imbalances. 8, it's 1 against 8, 3 against 13, 4 against 18. But selling came in late and pushed the market lower. To me that's a bearish signal. Again, I'm not looking for this to be selling off from 112.15 all the way down to 111.75. For me this would be a short-term scalping trade here. Get 5-10 ticks out of it. But anyway, then we hit our low about 226. Got a divergence, no ratio on the next bar. Again, you start going up. You can just see the volume is, I think, has drained out of the, I'll say drained out, but it's gotten much lesser in the June contract. I think I got a SEP chart up here, SEP footprint chart. Let's see. You could just compare the volumes and see for yourself. Hang on a sec. Bear with me here. Okay, here's the SEP contract. So this is September, and surprisingly, the volume is still in the June. This is right now. You can see slightly more volume still in the June contract than in the SEP. But again, it's it's one of those things. Which contract should you be trading right now during the roll? Again, they have not come out with this. They haven't updated the website with the change, but it's coming Thursday, and I said the contract expires on calendar. What's today? Today's the today's trade date the 14th. So at some point you're gonna have to be trading the June contract. Last trading day is June 19th. Settlement is 19th. So I'd be expecting it to switch over pretty soon. That's why you keep the charts open. But right now the volume is still in the June. But it's one of the things you just gotta watch. So I know when back in the old days, it really would be. The roll would be, on the 12th and 13th, the first 2 days of the week preceding, that you should be out of it. That's the way I've always traded it. But anyway, where am I here? Really quick, just look at one other market. If I can find it here. Talk about Jap Yen really quick. Find my chart. Now the interesting thing, there's some interesting things in the Japanese yen today. You're just sort of going back to around the 7 o'clock. Well, I'll say 7, but after the numbers came out. So you had this. This is kind of similar to what you had in the euro currency early. You had in this case, you had a divergence with a ratio, then delta scalper. The next bar, the euro currency, you just had the delta scalper. But then you run into this bar with some supportive volume here. You got point of control right on the bottom. You had a ratio bounds low, and the market popped up here. It went higher. So you had some very bearish signs here. You got a nice bullish sign here telling you, hey, this market has got some support. So if you're short, you better think of covering it. and I'm not saying get long, but at least covering it. There's something stopping this move here, and we do go higher. You get the delta scalper here right on this high. You got a divergence, no ratio. Up here you got a delta scalper again. This delta scalper signal failed. It came right back. And then next bar, sorry, 3 bars later, you got delta scalper again. You got a divergence and the ratio in the next bar. So just the delta scalper by itself, you're not convinced. Then next bar here, you got a ratio. You got the divergence. So it's giving you some signs that this market could sell off. And the other thing, this yellow one is not something that I talk about a lot, is this volatile transition. And again, it's very similar to the delta scalper, but it's a little bit different actually. But it's really telling me when there's a potential change, from supply to demand or demand to supply, and it's culminating up here, right around this high. And this market sell off, yeah, it sells off a little bit, but mostly goes sideways before hitting a new high. At this high, right around this, just off this high, you got stacked selling imbalance. Does it come off again a little bit? Nothing spectacular. You got delta scalper, but it's on a green bar here and here. That's not where I'm looking to take it. And then 9:15, you get up here right on this high. You got delta scalper. You got stacked selling imbalance. You got a divergence. You don't have a ratio. You don't have a ratio in the next bar, but you also got it's hard to see on here, but you've got this yellow down arrow, which is the transition again, giving you a sell. So you got a lot of selling signals up here. And the market does sell off a bit, and then just sort of start going sideways. I really expected this market to be a bit sideways action in the morning. It moved pretty nicely, but again, I was expecting more sideways action in the morning. Then again, 1 o'clock here is where things just went berserk with the FOMC. But anyway, this presentation is getting quite long here. I'll tidy it up for now. Anyway, thanks for watching this. I hope I made some sense. I hope you got something of value out of it. Sometimes I hear myself talking and I wonder what the hell I'm talking about. But anyway, if you want to learn more about order flows, visit my website, orderflows.com, or the delta scalper, which we're probably going to, when I get my programmer's approval, we'll probably hard code it into the NT8 version, and so it's not going to be available pretty soon anymore. But anyway, again, thanks for watching this, and subscribe to my channel if you haven't. Thanks. Bye bye.